Hello and welcome to the Fintech Show. This week, we're taking a look at the change in customer expectations as fintechs and banks are allowing faster use of their interconnected services. With so many of us needing to manage our money on a day-to-day basis, we want to know how incumbents are planning to address this whilst eliminating traditional friction. So we spoke with the Royal Bank of Canada, United Overseas Bank and Santander to find out how they're tackling the desires of modern customers. We also sat down with Personetics, who provide an AI-powered platform which can guide customers using self-driving finance.
My name is Jody Buggett and I'm President of the Americas at Personetics. I have the benefit of working with a broad swath of banks, from the most leading banks, the biggest banks, to some of the smaller banks that are highly tailored and offer customized solutions as well. My responsibilities here include our creating market awareness around self-driving finance and our capabilities, our approach around new client cultivation, and most importantly, our delivery effectiveness and delivering results for our clients.
Let's talk about self-driving finance. What is self-driving finance?
Ali, we know that most people are busy with their daily lives, taking care of their families, doing their work, and they don't have time to invest heavily in understanding and managing their finances. Self-driving finance is a way for banks to help customers throughout their financial journey and help them achieve their goals in a way that's effortless and also safe for customers. Like the concept of automated driving, self-driving finance is not an all or nothing proposition. There are several stages along the maturity path to achieve self-driving finance. The first stage is what's called data, being able to better interpret and understand data that's relevant for customers. The second stage is delivering personalized insights that help consumers manage their day-to-day banking more effectively. The third stage is what we call prescriptive advice. Based on those situations and those insights, what action should customers take? And then the fourth stage is automation, which is doing it on behalf of customers. All of this is underpinned by a sense of trust that banks create with customers.
Excellent. Just to expand on that a little bit, I thought that's what my banker does anyway. I thought that's what my personal banker would be doing anyway.
Yeah, and that is certainly customer centricity, and delivering personalized experience has always been an ambition for banks. The reality is that it's challenging to do. Most banks deliver, let's say, extraordinary experiences perhaps to their most profitable customers. Self-driving finance is a way of leveraging a deep understanding of each customer's data and behavior to deliver personalized experience to the broad swath of customers as opposed to just your best customers.
So it's almost like having the quintessential perfect personal banker at scale.
We believe that self-driving finance brings the best of the digital channels and the assisted channels, or the banker channels, together by combining data-driven personalization with personalized advice and having the bankers intervene when useful for customers. So we really think about this as bringing the best of both channels together for the customer to deliver to anticipate needs and deliver on behalf of the customer.
How do you see a bank in the world of self-driving finance?
Banks keep being the trusted party for managing money, regardless of that we have other companies which they are delivering state-of-the-art services in different fields compared to financial. No? But for the time being, banks still have that perception of trust regarding money that it has been cultivated and built during many years. No? But that's not good enough in the new context that we have. So what banks should be moving on is to give response to the complexity and time scarcity that today the people they live in. No? So banks at the end, what they should be is removing that complexity and making simple for the customers to manage their finances. And that is gonna be definitely enabled by technology. What we have to make sure is that technology is agnostic. You can use it good or for bad, and we have seen in the headlines. So if we really want to keep that trust, what we have to use is that technology under the right principles.
What is different about customers' expectations from their bank today compared to 5 years ago? How do you see these expectations evolving in the future?
So 5 years is a long time in digital. I sort of cheekily suggest it's like dog years. So it's not sort of 5 slow years. There's lots happened, particularly in Canada. So if you're looking 5 years ago, I'll give you some statistics. So approximately 5 years ago, in fact a bit less, about 48% of Canadians had a smartphone. So probably a bit less than, say, some of your viewers in the UK or Australia or Asia. Half of that half use Blackberries. So when you sort of look at this 5 years ago, around about 20 to 25% of Canadians actually had experiences with apps, downloading apps and banking apps. So mobile banking in Canada has been not a sort of a logarithmic curve, it has been a massive hockey stick in transformation. So without doubt over the last 5 years, that has been the biggest impact. So if we looked at 5 years ago, the total percentage of transactions done in mobile at RBC, I don't know the exact statistic, but it would have been less than 10%. Whereas now, mobile is our primary channel. I can tell you with that, 52% of the time our customers interact with the bank is on the mobile app. And it's over 50% of transactions, and it's over 50% of payments. So it has emerged as the mega trend of banking. It's no great surprise, but when you sort of put that in context, the thing that's interesting about Canada is it's changed very, very, very quickly, much quicker and more recently than other markets.
The industry is in a state of rapid evolution where the pace of change is really accelerating. The 3 primary trends that we see today, one is banks competing on experience, simplifying the experience, streamlining the experience, even beautifying the experience. The second is creating a more agile delivery model, being able to more rapidly deliver solutions into the market, take customer feedback, refine and optimize. And the third is anticipating customer needs and delivering advice that will benefit customers.
Next, we asked our interviewees how their own partnerships and collaborations could benefit the kinds of customers who want personalised technology at their fingertips.
Many fintechs have positioned themselves to be competing directly with banks, yet you've decided to partner and collaborate with them.
Why have you chosen this particular path?
We believe that banks' greatest asset is the knowledge they have about their customers. We have a unique capability to take customer data and transform it into useful insights that help customers manage their day-to-day banking more effectively. This creates a framework for banks to be able to engender greater trust with their customers, meeting the needs of their customers, anticipating and delivering solutions that are relevant for customers, and creating a stronger franchise. We believe this is the core to having a strong offense for banks, as well as a strong defense to differentiate versus competitors in the future.
My personal view on this is that banks are not software companies. And I've worked in a technology company before, and it's so different. So when you say that someone said that a bank is going to be a technology company, I think it's very difficult. I worked a lot of software companies, and in fact, I used to work for a software company in the internet boom days. My view on this is that banks do projects. They don't build software. And so today, a lot of banks have already rearranged their technology stack so that you can really expose the inner services of the bank and have the necessary APIs to really connect the fintechs in very, very easily, and that's what we've done. So with that, you have access to thousands and thousands of fintechs around the world who are really focused on their particular, neck of the woods in terms of, categorization software, personalization software, or transaction monitoring software. So I think that in future, we are going to see a lot more collaboration between banks and fintechs. To me, that's a much better model, because unless you're one of the really biggest banks in the world where you can afford to hire thousands of software engineers, and they're pretty much in big demand and therefore in short supply. It's going to be very difficult for you to build this on your own.
What does Santander look for when choosing a partner?
First thing and overall, and if the partner doesn't have it, we don't keep on having conversations, and I would say for the good of both the partner and the bank, we have to be aligned in the mindset, and it's customer-centric. We found in Personetics a company which fulfill not only being a top-notch solution, but having these soft partnership principles which enable to create value for the customer, but also for both of organizations. We have found with them where we can create a trust environment on collaborating on strategic things for the bank while they are engaging with other banks. So, and that's another characteristic that is really relevant that I didn't mention before, and it's we expect that partners not only engage with Santander, they are going to be engaging with other banks. And I think that's a healthy thing. The stronger that the partner is, the better for the bank. Their objective is to drive customer engagement in digital channels. How they do it is through personalized insights. So leveraging artificial intelligence, they source the transactional data of the customer, and with that, they provide personalized insights to the customer, which enables the customer to feel that it's in control of what it is happening in their finances. So, as I was saying before, when you are thinking on being a customer-centric and empowering the client regarding their finances, the first thing that you have to give them, it is knowledgeable and relevant information about what it is going on in their transactions.
We work with banks with a range of capabilities. Banks that are highly sophisticated and have enormous assets and competencies around data understanding and analytics, down to banks that are really seeking fully turnkey solutions. What we bring to banks of different means and different sizes, for the ones that are looking for turnkey solutions, we bring a set of proven capabilities that have been informed by 60 million consumers on the end platform, curated insights, prescriptive advice, and delivered as part of a turnkey platform. For the banks that have more sophisticated capabilities, our focus is really on enhancing, complementing, and accelerating their abilities to deliver solutions into the market. They can take our curated insights and advice and tailor them, configure them, in fact, create custom insights more rapidly and do it in a way that's highly tuned to their customer base and to their brand promise. This creates a higher degree of agility for those banks that already have capabilities. And we see those banks embracing our platform to complement and enhance their internal capabilities and create more agility for their business.
How does Personetics fit into this fintech ecosystem?
So we recognize that there's a broader ecosystem that banks are operating in to be able to understand customer information, deliver solutions, and create valued experiences. Our approach is to be tightly integrated with a bank's internal capabilities, to operate within their environment and help the banks deliver personalized experiences through their channels of choice, through the digital application, through web, through push, and through their bankers. So to the customer, it demonstrates an enhanced experience and a reinforcement of the bank's proposition to the customer. For the bank, it creates a sense of greater trust with customers and a platform that allows higher engagement and higher activity, and ideally higher profitability with customers over time.
There are a lot of startups. So, how do we know what are the right startups to work with? Because, if we work obviously with the wrong solutions, then it also absorbs a lot of our time. So what we've set up is actually, in fact, the meeting after this is to look at a particular fintechs in the space of what I call digital engagement. For me, a data-driven digital bank is really about digital engagement, and that's really what's going to differentiate the digital bank in the future. Because if you don't harness data to digitally engage, then you're going to be too similar to how a traditional existing bank is like. And therefore, we have a team of people looking at what this digital engagement space is and who are the leading fintechs there. And these fintechs that we narrow down and kind of produce a short list are the ones that we then start looking through to say, hey, this guy's got a pretty interesting solution that we think could increase our engagement capability even further. And then we start to do POCs with them, and then a couple of them will kind of fall into the right zone where we think, hey, this is a pretty a neat solution that we could enhance our capabilities even more in the future, and then kind of incorporate them into the overall solution stack that we have.
Finally, we look to the future of self-driving finance as our guests give us their predictions and advice for the coming years.
We have that open environment. There are many new propositions in the market, delivering really valuable services to the customers. And that means that the fintech ecosystem is much richer. Banks, and as a consequence, customers can benefit from that. So the PSD2 has enlarged the ecosystem. The banks have awakened, and the conjunction of two, it is better services to customers, which we are already seeing in the market. We don't have to talk about what it is coming. It's just to have a look in the market, look to the banks, and we will see that there has been a change.
To what degree do you see customers willing to let automated programs make financial decisions for them in the near future?
People are surprised how much computers are doing things for them already. So if you sort of stock take and think about this, we have to market a AI-driven investment product so that it changes around your investment profile and your age. They're quite common products, so robot investments. Even if you think about index funds, they're constantly balancing every day to automate the investment to mitigate risk around investment portfolios. And what we've really done with Nomi, particularly the finance save product where it is automated, it is taken to the next level where we actually see your money moving around. And it is interesting around how many people have opened that. So it's just about become the number one savings account opening bank. And you can only open through a mobile device. So it's as much as any other savings product. So proof of pudding's in the eating. Maybe our nans wouldn't use it, but generationally, I think more and more people get comfortable, we shouldn't underestimate how successful these will be.
Who will be the winners in self-driving finance?
The real winners will be the consumers. From a bank perspective, what will differentiate the winners will be three factors. One is those who can use customer data to create personalized interactions and advice. Secondly, those who create a sense of trust with customers by operating on their behalf. And third, those that create automated solutions that help customers better achieve their goals in a way that requires less effort, is safer, and has a more certain outcome.
With that in mind, what's going to happen to the banks that don't action these things?
In the future, customers will have even more choices, and they will see that certain providers are delivering more personalized experiences and experiences that are more tailored for those individuals as well. Banks that don't ascribe to this kind of approach will likely see lower organic growth, lower new customer acquisitions, and less depth of customer relationships with their current customers.
That's all for this week's episode of the Fintech Show. Be sure to check out the rest of our series and much more at www.fintech.finance. See you next time.